Thanks. Welcome, everybody, and thank you for your time today in joining us for the webinar, Building Globally Diversified Portfolios with ETFs. I'm joined today by Michelle Noth, who heads up distribution for financial intermediaries at 10X Investments. And together with herself and Chris Eddy, Chris heads up the multi-asset funds at 10X Investments. So guys, thank you very much for hosting this webinar today and for making yourselves available to cover a couple of topics which I'll run through shortly. So welcome.
Thank you.
So for those of you that have joined us today, I think just in terms of going over what it is we want to cover, I think first and foremost is understanding ETF trends in the current market environment. Always, interesting to or finding a way to unpack the mechanics of how the JSE-listed offshore exposures are constructed, specifically with regards to ETFs. Michelle will be running through the CoreShares S&P Global Aristocrats ETF, and together I think either herself or Chris will cover the 10X Your Future Fund, which they'll introduce you to. But I think also quite importantly today is to hear about the 10X acquisition of CoreShares and what it actually means for investors. So we'll cover that topic too. And then we'll end off with a live Q&A session. So, Michelle assures me that she's not going to take up the full hour in terms of her presenting. So the presentation will be about 30 minutes. There'll be a Q&A session, and then right at the end, there's a poll that Michelle will post, and we really would invite you to take part in that. It will obviously give us better insight into how it is that you operate in your FSP. So Michelle, Chris, with that, I'd like to hand over to you.
Thank you very much, Charles, and thanks to everyone for dialing in today. So let me share my slides here. And this is, you're quite right, this is one of the first times that we are appearing together, Chris Eddy and myself, as the new combined 10X and with CoreShares as part of the team. So let me start with that agenda item. So Charles gave us a good overview of what we can expect today. So 10X acquired CoreShares effective December at the end of last year. So we're now a combined business with over 35 billion Rand under management, spanning a range of investment strategies as ETFs, unit trusts, a corporate umbrella fund, an EB business, and the direct-to-consumer offering that you're probably all familiar with from 10X. And part of the rationale for acquiring CoreShares and what the CoreShares team is here to do is really build out the financial intermediaries piece and keep working with the financial intermediaries that we have always worked with when we were CoreShares. And we really see ourselves as an ideal rules-based manager to partner with financial intermediaries because we are an independent asset manager. We don't have any of our own advisors or wealth managers that would compete with you. So we really are looking to kind of provide the rules-based and index strategies that support the work that you're really doing with your end clients. And from an index manager, one of the most important things that investors always want to be comforted about is our ability to track indices, and when it comes to our ETFs, the trading efficiency. So it's always good to start with awards. So we've got we have a little humble brag about our Salter Awards. That's the South African listed tracker awards that Narina Fisser and Mike Brown from ETF SA host every year. And I'm proud to say that CoreShares ETF range has won several awards over the last few years in these important categories, spanning tracking efficiency, trading efficiency, and total return performance as well for some of our funds, which really speaks to our ability to pick the good indices and bring good products to market. Let me start with the ETF trends and what we're seeing globally. So, really huge increase in adoption of ETFs globally. The industry now stands at around $10 trillion under management, and that has grown tenfold from it was around $1 trillion under management after the global financial crisis in 2008. So over the last 15 years, assets have grown tenfold, and that really just speaks to the widespread adoption of these products. And why they are so attractive and why investors are, using them more and more is because of all these pros. So very accessible. So on your local exchange, you can trade any region, any asset class, any sector, etc. They tend to be mostly passive strategies, so offering competitive returns and very, very low fees, and broad diversification. So with one fund, you generally tend to get a broad asset class or a whole market. And these funds are very liquid. So ETFs are open-ended funds. So it means the liquidity in the ETF itself is a function of the liquidity in the underlying. So you can imagine, ETFs that we have in our market, like tracking S&P 500, for example, that's an incredibly liquid index. So the underlying index, you're going to have to trade billions and billions and billions of rands worth in that fund before you have to start being, worrying about the liquidity. And they're very transparent, so the issuers have to show all the holdings on their website on a daily basis. So they do what they say on the tin, and they're flexible. So any ETFs are appropriate for all investors, from small private investors right through to the institutional investors with millions or billions to invest. And so I recently attended Investment Forum in Cape Town and Joburg. It was great to be back at in-person events, and I'm sure some of you were there as well. And what I noticed is almost all the presentations spoke about ChatGPT. So I thought I must fit in with the crowd and have a comment on ChatGPT in my presentation today. Perhaps there's some sort of a warning there about the fact that ChatGPT is old now, if everyone's talking about it, and we need to find the next generation of natural language chatbots. But nevertheless, I asked ChatGPT what ETF trends were being observed, and this is what they told me. So number one, thematic ETFs, which I would completely agree. So you can buy anything from electric vehicles to renewable energy to lithium producers now globally, really a wide menu of the specific themes and trends to play there. ESG ETFs, so particularly in Europe, we're seeing investors becoming very conscious of being responsible investors, and a rush to market of all kinds of ESG versions of investment themes. Active ETF, so this is an oxymoron for a lot of people who always associate ETFs with passive investment strategies or index tracking strategies. So there are now many ETFs listed around the world that are actively managed, and this really just takes us firmly into the territory of seeing ETFs as a vehicle. So the decision between the unit trust and an ETF is really just how easily can you access them and what is available. So it's more tools in the toolkit. And I don't want to go into too much detail, but ETFs and unit trusts operate in completely different operating environments. And that's part of the reason why Wealthport's offering is so interesting, because they offer ETFs, unit trust, structured products alongside at one point of entry for investors. Fixed income ETFs, especially in the rising interest rates environment that we've seen last year, many more options for investors there, and global ETFs. So again, talking to that benefit of accessibility. So on your local exchange, you can trade any region in the world. So yeah, I thought ChatGPT did a good job with those top 5. And I'll just add some of the trends that we're seeing in our local market. So the actively managed ETFs have arrived in South Africa. So the regulations changed in October last year, which do allow for actively managed ETFs to list on the JSE. So ETFs, you must remember, are regulated by 2 regulators. Well, firstly, by the FSCA, the same as unit trusts are, if they are collective investment schemes. But in addition, because they are listed funds, they are regulated by the JSE. So both regulators have passed this new regulation, which means we basically anything that's currently available as a unit trust, in theory, could be listed as an ETF, as long as there's daily observable pricing in the underlyings, which really opens the door for issuers to issue all kinds of interesting new strategies. We are seeing more platforms enabling ETF access. So traditionally, because ETFs trade and settle like a stock, we've seen the wealth managers who run share portfolios that tend to be the big users of ETFs because it fits neatly into their operating environment. But we are, benefiting from, as I said, the functionality that Wealthport has, enabling advisors to access ETFs on a list. And more lists around the country are replatforming and retooling and improving what they can offer. Increase in passive adoption generally in South Africa. So we're still around 6% passive adoption rate in South Africa. So lots and lots of room for growth there. But what we have seen in global markets is there's now, of the new inflows coming in, more new inflows go to passive strategies than go to active strategies. So very, very wide adoption of these strategies. And the trend is, we are seeing that trend coming in South Africa as well. And just to remember that, unit trusts can also be passively managed. So there's more passive assets managed in unit trusts currently than in ETF. So there's two trends here. There's increasing adoption of passive, but also increasing adoption of ETF as the vehicle. And a growing allocation to offshore exposures. So we're very lucky. We've got a range of ETFs listed on the JSE that offer offshore exposure, and it's very convenient for investors to hold those locally. Obviously, they're going to receive their dividends in rand, so it saves the sort of inconvenience of having to repatriate dividends for clients that want to, use the yield that's coming out of these portfolios. And the same as in the offshore markets, we're seeing increasing fund ranges, so more fixed income products, more thematics, more infrastructure, ESG, etc. So just a little example of how investors might use these products. So, on the JSE, there is a wide range of ETFs of all the individual asset classes. So there is exposure to global bonds, local bonds, SA property, global property, etc., local and offshore equity. And what these building blocks do is they give the investor or the portfolio manager the ability to build a bespoke portfolio. And so we've called this the multi-asset strategist. So it's someone with a global macro view who potentially wants to focus their investment decision on the asset allocation decision, spend time deciding how much local, how much offshore, but then simply implement those individual building blocks with an index and not try and pick an active manager and spend time doing the research. Obviously, there is research involved in choosing which index to use, and that's certainly a topic of conversation. But just the idea of building this neat, low-cost, multi-asset global strategy with individual building blocks is what we are seeing more and more investors using in South Africa. And so with that, I wanted to unpack the offshore access a little bit more. Obviously, there have been regulatory changes around Reg 28 that have allowed us to increase more the offshore portion for our local investors. And I just wanted to sort of unpack how that works in ETF format and why investors might want to include more offshore in their portfolios. So we're not one of the asset managers that bash South Africa and come and tell a doom and gloom story about how terrible the load shedding is and how bad the economy is, and you take all your money offshore. That's not at all how we approach it. We more look at the global investment landscape, and most of us living in South Africa are earning rands. Many of us are fortunate enough to own our own homes, so we're very exposed to the South African economy. And then when we look at the global investment landscape, looking at all the companies that you can buy globally, the companies listed on the JSE make up less than 0.5% of the investment opportunity globally. So it's really just a case of saying, we're very exposed to the South African economy already in our lives, in our personal wealth, and in our investment portfolios. Most of us could do with a little bit more global diversification and a little bit more of participating in the global growth story by investing in offshore markets. And important to remember, when you invest in an offshore exposure ETF that's listed on the JSE in rands, there's two components to your return. So you're going to have a return in your holding that's based on what the actual offshore assets have done. So in this example, if we're looking at MSCI World, which is a well-known global equity benchmark, the black line at the bottom, that's the performance of the actual global equities basket over the last 5 years. But then, because our ETFs locally are listed in rand, you have to factor in the currency impact as well. So whatever performance the rand dollar did, or rand versus whatever underlying currencies in your basket, that is going to come through in the performance as well, which over the long term is a good thing. So generally the rand tends to depreciate against hard currency in the long term, and that's you know, a nice boost for performance that we want to see. But in the short to medium term, that can introduce some volatility into your investment. And just keep in mind that the rand is one of the most volatile asset classes in the world, so you need to keep focused on that long-term view. And so I'd like to talk about one interesting building block that we've seen many of our investors taking interest in over the last year, and that is the CoreShares S&P Global Dividend Aristocrats ETF. So S&P Global Dividend Aristocrats is part of the Dividend Aristocrats index series that is very trusted and established. So around the world, there's over 300 billion rand tracking this strategy. And what this methodology does is it screens for companies with a long history of paying and growing their dividends. So as you can imagine, it's a very intuitive investment strategy, and you're getting access to quality companies. So a little bit tongue-in-cheek, but I'm sure you've heard before that when you look at financial statements of a company, the only two numbers you can trust is the dividend or the cash flow number and the page number. So just focusing on a company's cash flow is a very sort of defensive and safe way of understanding what's going on in that company. And so by choosing companies that have paid and grow their dividends for long periods of time, that's what the strategy is doing. And so what you tend to get is these very established household names, like some of the logos on the screen. So, you know, Lindt, McDonald's, Coca-Cola, Johnson & Johnson, etc., Procter & Gamble. And as you can imagine, throughout the economic cycles, even in a downturn, these companies tend to continue to plod along, doing what they've always done. You know, we're always going to keep buying washing powder and toothpaste and shampoo and definitely chocolate when we're in an economic slump. And so, and that's why this index methodology gives you a focus on quality income. It's giving you exposure to growth assets with a defensive quality. So for investors that still do want to be invested in global equities, but they are perhaps feeling a little bit nervous about what the global macro environment is looking like at the moment. You know, we've just sort of got used to having a year of the Ukraine war, and then in the last week we're getting all these jitters out of the US, banking sector and the sort of issues with exposure to the bonds and the rising interest rates there. So this is a way of staying invested, but with a defensive quality in these sort of robust, established quality companies with low debt levels. And the benchmark is very diversified, so around 300 shares across 23 countries. And that is just a quick look at the country split. Just checking my time here. And so, yeah, 60% in the US, but remember those are big global companies like, you know, McDonald's and the examples that I gave before. So they're not only getting their revenue from the US, and then a nice split of investments around the world. And the sector allocation is particularly interesting. So because of the nature of the selection and these, you know, filtering for these established businesses, you get quite a strong overweight in consumer staples. So, you know, 17.6% there at the top. And you get a natural underweight of information technology, so IT only at 6.9%. That's a big difference between the market cap weighted benchmarks at the moment, which all tend to be quite heavy in IT, you know, closer to 18 to 20%. So that's what makes this a good diversifier. And, you know, especially for clients that also for your investors who are a little bit nervous on, you know, maybe how much IT has run, or the increased interest rates on these sort of growth sectors. This is a nice defensive allocation for those types of investors. So yeah, in summary, over $1 billion assets in this ETF. It's got a nice steady yield, which is what it's designed to do, around 1.8%. The yield has stayed around those levels, even though the market prices have moved, and a competitive management fee at 35 basis points. So that's just an example of an ETF that could be in your toolkit. And yeah, really just to reiterate that there's a wide range of ETFs available on the JSE that make for tools that you can, you know, make bespoke portfolios for your clients. And then to put it all together, I'm going to hand over to Chris Eddy, who's going to talk about how we at 10X combine these passive building blocks into our own multi-asset solution, just to give you a more practical example of how it works together in practice.
Great, thanks Michelle, and good morning to everyone. It's really great to be with you this morning. So as Michelle mentioned, the 10x Your Future Fund, it's our flagship high equity balanced fund, and within this fund we effectively apply that what did you call it, global macro strategist, I think, that type of framework. This is a great case study to see how that is applied. So Michelle touched on a lot of benefits of using ETFs and broadly more passive and index tracking strategies. Unfortunately, however, there is no sort of broad-based recognized multi-asset index. So when building a multi-asset solution, one needs to make specific decisions, and in doing so, incorporating index tracking building blocks, we think really adds a lot of value. So just to give you a high-level overview of our multi-asset process, it starts really with determining an optimal asset allocation, which is informed by the past, but also based on current market environments and what valuations imply about forward-looking returns. So that asset allocation decision is where we focus most of our time. The next step is really saying, how does one implement each of those asset classes within the portfolio? And that's where we lean very heavily on implementing through index tracking strategies at an asset class level. And lastly, we take our portfolios through quite a robust stress testing just to understand the different risks in the portfolio. But I think the themes that run across each of these steps consistently are diversification and cost management. In relation to today, it's really that step number 2, which is the use of the index tools that Michelle mentioned earlier. So implementing that asset allocation, once you've established what that is, through reliable and predictable building blocks. If you think about the asset allocation process, it's often driven from a top-down basis, and a lot of the assumptions and inputs into asset class modeling are done at an index level. So what you don't want to do is go through a really robust asset allocation process and then implement your asset classes with a lot less predictability. And that's often the risk that you take when you invest in highly stock-specific strategies. So we see a lot of benefits in using index tools at an asset class level because of all the factors Michelle mentioned in terms of bringing diversification, moving that single stock risk out, the predictability of outcomes, cost management, the ease of access, as Michelle mentioned, to buying one ETF or one index fund. You get a whole range of exposures to global strategies, fixed income, equity, and more importantly, because you're not focusing on stock selection, it allows you to spend your time focusing on asset classes and asset allocation, which in a multi-asset portfolio really drives the end client outcome. So the 10x Your Future Fund and the strategy 10x has been running has a 15-year track record. Now, it has historically only been offered sort of internally in the 10x wrap products that Michelle mentioned earlier, but we really are excited to bring this product to the broader industry and broader distribution channels for further adoption. 10x in 2008 was really a pioneer of using index tracking building blocks in multi-asset portfolios. And this was at a time when a lot of the single asset class strategies weren't necessarily available. But CoreShares over the years has done a fantastic job and built out many tools spanning many of the different smarty boxes that you see on the screen, from SA equity, SA property, global equity, global property, SA bonds. Strategies are all available in the ETF form issued by CoreShares. But there has been, and that's been the big shift over the last 15 years, is that more and more standalone single asset class ETFs have become available. And ultimately what that enables allocators and advisors to do is really build their own asset allocation solutions for their clients. What's quite interesting, we tone down some of the noise of the smarty box chart, is that SA equity has historically always really made up the bulk of sort of high equity balanced funds in the South African context. In the 10x perspective, it's gone from 60% of the portfolio down to 55, down to 50, down to 44, and currently even lower than that as Regulation 28 has been relaxed over the last 15 years. So going forward, we think that SA equity is going to play a less of an important role in terms of dictating the outcomes of balanced funds, and there's a much larger role for those specifically global index and ETF building blocks to play in balanced portfolios going forward. From a 10x Your Future Fund asset allocation perspective, you can see that currently, as at the end of February, SA equity only made up 36% of the portfolio, but we're well diversified across other asset classes, including developed market equity, South African bonds, emerging market equity, international cash, international bonds, international property, developed market property. And most of these strategies are all implemented through the tools that Michelle mentioned earlier. That move away from that 30% limit, previously was 25%, now up to 45%, makes the opportunity set for South African balanced fund and Reg 28 investors much larger, and our current offshore allocation is at around about 40%. But how you access those global asset classes becomes more and more important. You want to do it in a cost-effective manner. You want to do it in a manner that has very low sort of tracking error risk to the broad asset class that you're looking to implement as well. As kind of evidence of using index tracking building blocks in a multi-asset portfolio, over the last 15 years, the 10x Your Future Fund strategy ultimately has delivered an annualized return of 10% per annum over 15 years. And that compares to a category average within the CISA multi-asset high equity category of 7.8%. So roughly about a 2.2% outperformance. And there are two aspects to this. I went actually yesterday to go look and see what the average balanced fund TER is in South Africa, and it's around about 1.45%. And the strategy here in terms of that we're going to take to market in a listed environment, we're looking to price out at 25 basis points. So you can say roughly about 1% of that outperformance is due to the lower cost. Consistently implementing index tracking strategies through a robust asset allocation process is a lot more valuable than just the cost saving. And we think that we managed to demonstrate that over the last 15 years. And you can see the impact over the last 3 years is actually increasing, not decreasing, as you have broader fee compression in the industry as well. So just to finish off and wrap up, historically, we've got a 15-year track record with this strategy. It was previously only offered internally within broader 10x wrap products, but we really are excited to take the strategy out to market in terms of a broader distribution channels and make this fund available for use in many different client solutions and portfolios. So there's about 16.5 billion in the fund, which makes it one of the larger multi-asset funds in the category. I think it's the 11th largest balanced fund in the high equity category. We target CPI plus 5.5 over a rolling 5-year period. And the pricing point, as I mentioned, we're looking to target at 25 basis points plus that. So that's just a quick overview of how we think about implementing index tracking and ETF building blocks within a broader multi-asset solution, the opportunity that exists for broader adoption, more specifically of global ETFs, and touching on our 10x Your Future Fund, which we are going to be looking to take to market over the next 2 months. We've got a roadshow lined up for May, Michelle.
Yes, yeah, hopefully many of you will join us.
So thank you very much for your time. If there are any questions, we certainly will be happy to take those.
Thanks, Michelle. Thanks, Chris. I think, are we going to take questions by way of the chat box, question and answers, Michelle, or are we going to open up that?
Perfect. I think everyone who has a question can just pop it into the Q&A tool on the Zoom screen.
Fantastic. I think while guys are busy opening up the webinar chat box, obviously in my excitement to get this webinar started, I failed to mention a little bit about who I am and what it is that Wealthport do. So I'm Charles. I head up distribution for Wealthport. We're an independent list platform. just as Michelle spoke to their independence in terms of constructing portfolios, etc., etc. We at Wealthport, in fact, don't have any association with any asset managers or mancos. We don't have our own funds. We are a pure administration platform. And, I think as Michelle alluded to earlier, how do you make, I suppose, platform business sexy? Well, I think it's our ability to be able to do things that, some of our, I suppose, call it competitors are currently only managing to do now. We're able to offer model portfolios on our platform that are pure ETF based, or a combination of both actively and actively managed unit trusts and ETFs. And in fact, you can have a combination of all of those on a single client portfolio. So, and it's not to say that, we have the golden bullet here. We've just been able to, I suppose, take advantage of the technology that was available when our platform was established some 8 or 9 years ago. Just having a look to see what the chat box looks like. Guys, if there are any questions, please do make...
I see there's one from Adrian. Thank you.
Sure.
About the question about the CoreShares
preference share
ETF. So that's actually a good opportunity. Thank you for bringing that up. So the CoreShares preference share ETF has been the only preference share ETF available in South Africa for many years. It has been a great tool. So preference shares are very interesting asset class, nice diversifier, attractive yield, but taxed as a dividend, etc. Unfortunately, what we've been seeing in the market in South Africa is due to the Basel II regulatory changes as to how the banks classify capital. Most of the banks have, over the last few years, started to buy back their preference shares, as it's not an attractive source of funding for them anymore. And so what that means for our ETF is that there's actually not enough liquidity in the ETF, in the preference shares that are left in the index. And so we are currently balloting to change the mandate of that ETF. And I mean, we've really worked very hard on a replacement strategy, because there is no way we can stay in preference shares. There's just not enough liquidity left. Standard Bank has 30% of that index, ABSA has 30% of the index. If one of those redeem, we'll really run into a liquidity crunch. So we have to be prudent and look after our investors, and just make a call that now's the time to change the strategy in that ETF. And so what we are changing it to, and then the 22nd of March is the last day for investors to respond to the ballot. So if we get enough positive responses, then the new strategy will start trading from the 19th of April. And what we're changing it to, or hoping to change it to, is it is called the CoreShares Yield Selected Bond Index Fund. And so what we've done is we've created a custom index with S&P, where we take the universe of government bonds in South Africa, and then S&P has ranked them by yield, and we take the 8 highest yielding bonds, and we've created a yield weighted index out of that. So what you end up with is a much higher yield version of government bond indice, of the government bond index. And that's currently, at a premium of about 1.5% to the plain vanilla index. And it does tend to be a longer duration. So at the end of last year, the long end was higher. That is sort of coming off a little bit now. But in general, it has got a longer duration as well. So it can also be a tool for investors that want to add duration into the portfolio. But please email me if you need more information on that. And we're hoping that all our investors are going to be as excited about as we are about being able to still have that sort of attractive yielding profile in that fund.
Perfect, Michelle. Thank you. And I see there are 2 further questions that kind of overlap. So when are advisors able to support 10x, and are you going to be available on any lists? And I suppose the overlapping one is, will the CoreShares ETFs unit trust be available on 10x platform, or will we need to use third-party lists to access these funds our clients?
Yeah. Okay, great questions. So 10x doesn't have its own list. So 10x has a direct-to-consumer offering where sort of, man on the street can phone up and have an RA set up for them, etc. What our strategy is for the professional channels is the same as what we've always done at CoreShares. So we are a wholesaler of funds, and then we put our funds on all the other lists. So we put them on the shop floor at all the other kind of grocery stores where IFAs are already shopping. So the CoreShares ETFs and unit trusts that are listed on lists already will continue to be there. And then we're in the process of adding the 10x multi-asset funds. There's the 10x Your Future, the high equity one that Chris spoke about, and then also medium equity, low equity, and income funds, so 4 of them. And we are in the process of adding them to lists. Wealthport, of course, we will have all our ETFs are available there, and yeah, hopefully, Charles, can we put the multi-assets on? Okay, excellent. Thank you.
Certainly happy to do so.
Thank you. But yeah, in terms of the other lists, there is that sort of chicken and egg where they like us to show demand first. So if any of the IFAs on this call would like to have these funds added onto the list that they use and they're not there already, yeah, please reach out to me and we can start to gather a little bit of a motivation. So yeah, all the lists seem to have their own protocols about how they do and don't add funds. So it is a little bit of a process. But CoreShares and 10x will be putting as many funds as possible on as many lists.
There's another one. What lists are you currently on?
Okay, so ETFs are not on many. So Wealthport is one of the only lists for advisors where you can buy ETFs in general, not just our ETFs, but any ETFs. The Signia list also has all of our ETFs available. iTransact has all of our ETFs available. And then, yeah, all the other major lists, the big ones like Glacier and Momentum and 91 and Alan Gray, etc., they don't offer ETF access. Glacier offers some ETFs. They only offer their own Satrix ETFs at the moment. So we're going to have to convince them a little bit to be a bit more open architecture there. And our CoreShares Top 50, which is our SA equity benchmark of choice, in unit trust format, is available on all the major lists. And the CoreShares Total World Fund, which is our global beta benchmark of choice, that is available on all the major lists. And also widely used in DFM solutions, both of those, the Top 50 and the Total World Fund.
Thanks, Michelle. And just to echo that, to what Michelle mentioned earlier, if you go to our website, there is a fund list of all ETFs that are currently being traded and utilized on the Wealthport platform. The list is extensive, so feel free to have a look. Alternatively, more than welcome for you to reach out and contact myself or Cliff Coxwell down in the Western Cape or Josh here in Joburg to be able to assist you with any queries that you have on the availability of ETFs on our platform. Just trying to see, Michelle, if there's anybody else that has any questions.
I've answered most of those.
I think so. I mean, so I think, guys, there is still some time. If there are any questions that you do have, please feel free to pop them into the chat box. If not, I don't think we're going to keep this open for another 20 minutes and have some dead time. Although there are some panelists here that are much better to look at than myself and maybe Chris. So guys, I think just in closing, I think Michelle, Chris, thank you so much for your time today. As financial advisors or people who logged into the webinar, I hope today gave you an understanding or a better understanding of what ETF trends are out there currently in the market environment. Michelle, thank you for highlighting that. And I also think two very interesting ETFs, or rather the ETF, the S&P Global Aristocrats ETF. So guys, if you are looking for a defensive quality global equity investment, I think there's a great opportunity there. And then Chris, your the 10x investments, obviously the flagship high equity multi-asset solution in terms of the 10x Your Future Fund. If there are any questions or queries that you as a financial advisor have out there, please feel free to reach out to Wealthport. We'll connect you to Chris and Michelle. But I mean, alternatively, reach out and engage directly with Michelle. I'm sure she'll be happy to help you with regards to any questions that you may have. Michelle, I see.
There's two more.
There are two, yeah.
Questions coming through. So
when will you be able to access, sorry, Michelle, on Easy Equities? So when will you be able to access this on Easy Equities?
Yes, so what makes ETFs so accessible and convenient is that any online share trading account or traditional stockbroking account that is able to trade shares listed on the JSE, so all the kind of individual stocks, can also trade all the ETFs that are listed on the JSE. So yes, all of our ETFs are listed on the JSE, and therefore they are available on Easy Equities and all the other online share trading accounts. The difficulty for advisors is that Easy Equities doesn't have a functionality where you can run a portfolio and then charge your advice fee on top. And so that's where this whole conversation around the list access for advisors and how ETFs fit into that comes in.
Thank you, Michelle. And then what are other thematics or ETFs are you looking to launch this year? Any interesting global feeder thematics? Chris?
About the family secrets now. No, so part of the excitement around combining the CoreShares and the 10x businesses into one is that we've now got a really, really well-staffed investment team. So the legacy CoreShares guys and Chris and his colleagues in the legacy 10x. So it does mean we've got capacity to bring more interesting products and a wider range of products. At the moment, we've been very heavily focused on building out our fixed income range. So I spoke about the sort of higher yield version of government bonds. We also launched a plain pure vanilla Govie ETF at the end of last year, CS Govie. And we are working on some more fixed income products, which I'm going to ask you to sign up for events in May so you can hear about the new exciting fixed income ETF that we're planning to launch in the coming months. Yes, weeks. But at the moment, we do also have some work in our pipeline around some more global exposures as well. But we'll stay tuned, is the short answer.
Fantastic, Michelle. Thank you. And I think this one almost, I think you've kind of answered this in the previous question that was asked. Can advisors assist their clients to invest directly with 10x or CoreShares, i.e. no lisp?
Yeah, so we don't have any plans to build a list or a platform for advisors to connect to 10x directly. There are some situations where we will work directly with advisors, and that's more in the case. So I mentioned at the beginning that we see ourselves as a well-placed, index manager to partner with financial intermediaries, and with this partnership ethos, we have actually worked with some, let me say, more sort of bigger brokerages where they want to launch their own multi-asset solution with passive building blocks, and then we are able to run that whole piece. For example, we are the passive engine behind the BCI range of multi-asset funds. So again, they've got a low equity, medium equity, high equity multi-asset global strategy built with low-cost index building blocks. And we run the individual passive building blocks for them, but we also run the whole operational piece. So it's almost more like an outsourced portfolio management solution. So when they get cash flows coming in and out, we actually allocate that according to their specified asset allocation into the individual passive building blocks that we run for them. So yes, I think if you are interested in working with us in sort of a more structured way, we'd be very happy to talk to you.
Fantastic, Michelle. Thank you. Another question, does Wealthport work with advisors? Yes, we certainly do. As I mentioned earlier, we're an independent list platform. I'd be happy to engage with you in terms of contracting, et cetera. Michelle, I don't know if you want to maybe, I suppose we still have a couple of minutes left, and there will probably still be one or two questions that might be pop up in our chat box. But maybe if you want to, and I don't know if you have loaded it yet, but the poll that you wanted to, or the...
Oh, yeah. Thank you, Charles. So it's actually just a survey that's going to pop up in the browser when people log off.
Okay,
so,
all right.
Fantastic. If people just take it very short, just a few minutes. And also, just to mention that we are going to be doing a series of breakfasts and lunches in May to kind of unpack the multi-asset funds a bit more with Chris Eddy. So we'll be in Joburg, Durban, and Cape Town for those. So yeah, please look out for those invites. And any other questions that you think of later, you can email Charles or myself. So,
perfect. Thanks, Michelle. Yeah, guys, I think that's I think it's close to wrapping up anyway. I think we've had a good session. Again, Michelle, Chris, thank you so much for your time. Thanks for arranging this. It's always nice to I suppose spread the word in terms of why ETFs are growing and continue to grow. Probably at a pace that's it's rapidly increasing as each year goes by. In fact, it's not even years now. I think it's been broken down into quarters. So it's always, and it's encouraging to hear about all the developments that are continuously happening in this space. So financial advisors, for those of you that joined us, thank you so much for your time. We really do appreciate you logging in and joining us. And again, if there are any questions or queries that you have post this webinar, please feel free to reach out to either myself and Michelle, and we hope to be chatting or maybe seeing you sooner rather than later. Thanks and have a good day.
Thanks so much.
Thank you. Cheers,
Thanks, everyone.
Bye.
Bye.